What is going on, everybody, and welcome to another weekly update. And in this video, what I'm going to provide you is events, earnings, and stock picks for the upcoming week to help you get prepared for what is to come. Now, if that sounds like something you're interested in, consider subscribing, as I do provide daily updates as well to keep you ahead of the pack. Now, getting into this week, there is a lot going on this week. As we all have seen, the market has done quite a bit of selling. What is causing the selling? Uh, well, there's some key things that are happening right now. On Thursday, you had Powell, something I talked about last weekly update. We had Powell coming into Thursday. The first initial meeting wasn't anything, it was pre recorded. Anytime, this is something to remember, anytime Powell comes on pre recorded, it's not going to have an impact on the market. Now, the next big thing is he did come on and started talking about a 50-point basis move. That is something easily going to happen into the next FOMC meeting. And people took that and they ran. And people didn't like that. Technical wise, we needed a pullback. Something I've been talking about. The market went parabolic for about 9 days straight. That being said, it didn't test any previous levels, and to be bullish, we need to be testing previous resistant levels to help build strength and moving up. And we didn't do that. We went parabolic, and so now we're going to get a parabolic or a elevator down move, essentially, when that does happen, when you go parabolic without any retesting. And so we're seeing that. We're still bullish, which I'll get in the technicals here in a minute, but we're still bullish technical wise, and we can still do a little bit more selling. That being said, when Powell came out and talked about the 50-point basis move, and people ran with that, all we got on Friday was 75-point basis move for every essentially meeting from here on out. And Fed futures started talking about uh, 2.5 percentage wise rate increase by the end of the year. So that being said, there is a lot. The market really doesn't know how to take that, right? They only priced in, they essentially priced in a 50-point basis move with no asset purchasing coming into that last FOMC meeting. And the reason we ran is because he came in extremely low and assets continue to be purchased. Now we have the meeting. I have it marked here. The meeting is on May 3rd and the 4th. The 4th is what really matters. That is on a Wednesday, because that is when Powell actually comes out and talks. So you get the full report of what went on with the meeting at 2 p.m. Eastern Standard Time. Again, we are still a week out, so remember that we are still a week out, but the market will start moving beforehand. So 2 o'clock, we'll get that earnings statement, and then we'll have Powell at 2:30 fielding questions. He'll have a short statement, and then he'll start fielding questions, and that's when the market really starts getting volatile, especially in this market. You have to understand that before, it doesn't matter. Given the situation, the market isn't always, the weight changes on specific events. And when you have someone like Powell, he always has a lot of power when it comes to the markets, and people wonder why he's so generalized in a lot of different things. That is why, because everybody hangs on his words. So if he says something incorrectly, he can sway the market, the index, 50, 100 points at a pop. So he has to be very careful about the way he approaches this situation. Not so much like the president. The president can, but Powell has way more influence over the market. So being said, that is not again this week, that is next week. But this week we do have the biggest earnings of all earnings. We have big tech. Now we did have Netflix and we did have Tesla, and things to take away from those two earnings is that Netflix, they didn't do bad as far as number wise, but the forward guidance was they're going to lose two. They thought they're going to lose 2 million subscribers, uh, which absolutely, obviously devastated that company, and it got wrecked this past week. And then you had Tesla, who did outstanding, and they hardly moved. Now, that is a lead indicator of what I've been talking about and why, and it goes into how I trade stocks, trade options, is because you have to look at these events, look at these big industry leaders, and when they do extremely well, and they just blew expectations out of the water, and then all they did was barely pop, and they started selling off. That is a lead indicator that the market is weak. That you need to either one, get out, not take a position, let the market move beforehand, uh, to determine where to go from there. This is what I always say: you need to be mindful of banks. Banks have a huge influence on the index and what's going on with the index, as well as growth. A lot of growth has been wrapped into the index as well. The S&P 500. A lot, like I stated last year, a lot of the big growth stocks got essentially adapted into the SPX. So again, big week this week. Tuesday we have Microsoft, Google, Visa. Now Visa isn't what I normally trade all the time unless it's around earnings. A lot of these plays are continuation plays, and some of them could be really good. Some of them going to be really bad. It's really going to determine. The biggest one we have this week is going to be Thursday. Everybody's going to be watching Aapl. Aapl has been the safe haven. If you haven't noticed, over the past about week or so, Aapl has been holding the market tech-wise. Aside from Tesla, Tesla did really well, and it's whole. Even though it sold off pretty crazy on Thursday, it still held its own on Friday when the whole market is in general just sold off. So Aapl actually started to cave quite a bit on Friday, but still held for the most part. Amazon, it really could go either way. I think what we're seeing, especially like from Snap earnings and talking about Netflix, is the fact that they're losing all these subscribers because partly due to sanctions, and people in Russia were essentially banned from Facebook. So that's why Facebook came crashing down. Now, Snapchat. Something looking at Snapchat, right? They were heavily reliant on Apple. They did well, and they managed to hold ground into going into past earnings, even with a sell-off. And so you're starting to see a lot of things are starting to hold. Things that have been high or selling off a little bit. But the general index, you have to remember that the banks pushed really hard, and so that's why we got a massive sell-off on Friday. Again, when it comes to the index, banks have huge weights, and anything that is not an industry leader will sell off fast, and people will shift their money into safe havens, well-known companies. And so that's what you have to keep in mind. This is why you see massive drops and certain things hold because of that fact. And people aren't going to keep their money in a company. Maybe that be a company may be really good, but you know what? If they're not quite established yet, people feel safer keeping their money in different stocks. Institutions feel safer keeping their money with not projection per se, but someone that's already proven. Even though Tesla's projected a lot, they've already proven a lot. This is why I always reference Tesla, because they're in this current state, and they're the best, essentially the best stock that has outdone itself in innovation and everything else. Even going through a pandemic, they've done terrific. So being said, again, Microsoft has been selling off. Google's been selling off. That's a big thing. Google, their ad revenues. So how much of an impact is that going to have on them with Russia being locked down? Roku could get affected majorly, and Apple. The biggest thing with Apple is lockdowns in China. How much is that affecting them? And I think that's why this one is under the microscope. And then all these are under the microscope this week. And if any of them do bad, I can see us coming down a little bit more. It's not so much the earnings; it's more so how their forward guidance looks. And I think this is kind of just setting up for the fact that it's trying to normalize the market in general, um, and then from that point, head for back up, start heading back up. I think is what we're kind of aiming for. So we're aiming for this meeting, so things will sell off. Again, if forward guidance is bad on any of these, it's only going to continue to make a sell going into this. But I think we'll come to a close base, and then we'll start pushing up. And then again, you have your major influences, the major events. If the war ends, I think it's just going to pop the market really, no matter what happens with the Fed. If China decides to enter, whatever they play a big part in any, they hold a lot of weight if anything happens with them, if they choose a side in the war, whatever the case is. Watch list. Now, this watch list, typically what I do, even with these these moves here, these expected moves coming into this week, you have to realize that we sold off. So now the market makers, what they're doing is they're heavily trying to cover themselves by putting in huge spreads. You got Amazon with 200 points, Google with 200 points, Microsoft 46, Tesla 72, and the SPX. The SPX is actually absolutely ridiculous. I trade the SPX quite a bit, and the biggest thing with this thing here is that they've priced in so much that you're going to have to get a Friday move. Look at a chart on Friday. You have to get a Friday move to go positive to make anything out of option contracts on SPX. That's how much they have priced in. You need almost over 100-point move on SPX to be profitable on that option. And so when there's so much volatility like this, and depending on what stock it is, you're just not. It's not even worth playing those contracts. So even though I have SPX on here, I'm kind of looking for consolidation. I'm kind of looking for some kind of some movement or basing that's going to actually kind of calm down these contracts and options. So SPX is on here, but it's more so just really watching this closely and watching the options. It's always good to be watching the index and seeing the option flow and seeing how the premiums are building or not. If the premiums are building, they're expecting a big move, and then again, whenever that move happens, you don't get near near the percentage out of that. So. And then Amazon and Google, again, same thing. These moves are ridiculous. So we'll have to see how they play out. Again, this is why I do daily updates, to give you updates on those kind of things. So technical wise, SPX, massive move over 2 days. We had the Powell event leading in. We started selling. And then from that point, we just completely flushed when we started just talking about 70-point basis move every meeting, because that was not priced in. And now the market might price some of that in. How low will we go? I think it's more so the market will sell off a bit just to try to price it in. I don't think that we're going to break this 4161 level. Anything is very much possible. This is a good spot for us to bounce, to be honest. So on the daily, this is what I'm talking about, the SPX. If we do decide to pop here, they got such a big move priced in. 70-point move on SPX is a huge move. And if they got that move priced in on SPX, looking at some of the call options, this one contract that only costs you maybe $1,000. Say on Wednesday when the market wasn't moving crazy, may only cost you $1,000. Then after this move, that same contract is pricing in almost $30K for that contract. So it just jumps so dramatically after huge volatile moves like this, because the market maker is trying to cover that position because they're obviously not trying to lose money. So again, you have to really watch this. Again, we're at a really good point to flip back up and start running up. We have to see. I think that's heavily reliant on what goes on with, again, the earnings this week. And so I can see us possibly chopping here. If we stay flat on Monday, I can see why that we'll stay at this level because we want to try to reverse back up if earnings is good. If we don't, we can sell straight down to the 41.73 mark. From that point, we might be playing out this wedge, so we might get another little pop, and this can continue on into the Fed. And then from that point, if they do give a 75-point basis move, but they don't cut asset buying, we could potentially start pushing back to all-time highs again. Else, we might break down. But if we break down this level, the 41.63 mark, again, we can start really selling off. And then you're talking about 200 EMA weekly. So that's a huge move, and you're breaking the 200 EMA monthly. So if you break that, it's more than likely what you're going to see is a 50 EMA monthly test. And that can get pretty low from that point. Actually, let me take the studies off of here. I don't like to keep the studies on here because they kind of mess up the chart. But so being said, well, we do have a very interesting week. We're at a very critical level. We do need to hold this. If we don't hold this, again, I can see us hitting this bottom level. Then you're really testing some support that you've already tested 3 times already. The more you test a support, the more likely it is to break and fall down. So even though there's a lot of consolidation, this year in general has been just a rough year in general. We've pretty much sold off. Definitely bears have been in control this year for the most part. But we get these parabolic moves. Get any kind of good news or no news is sometimes good news, and it's been popping us up. So we definitely have to see how this does play out. So watching that key level there, obviously too, is if we back test the 43.67, you have to understand we're going to get a hard rejection off that. That's a very key level that we broke. And so the first attempt, we will get a hard rejection off that. So that's something I'm also watching on the SPX. Again, I'm not playing SPX options until some of that premium dies down, and that's not going to happen until some of this volatility dies out. When the volatility dies out, say we start chopping around this week into the FOMC, that might chill some of the contracts till then. Bitcoin is another big one, and I know there's been a lot of questions about Bitcoin. Is Bitcoin going down? People are watching this channel, but you have to understand, just because it's a technical channel break, it doesn't mean anything. Technicals have not been playing out. Technicals, the odds of technicals playing out are very slim. And it seems even the longer I've been in the market, technicals have a less and less percentage-wise of actually working out. So, so being said, just because it broke this wedge doesn't mean anything. This is why I go off of supply and demand zones, because that is really what matters and what is going on with the events. This is why I talk about you have to be up to date on current events, because of the fact that you need to be paying attention to what's going on. There was a big announcement on, I think it was Thursday or Friday, that Stripe is starting to accept crypto. And you have to understand that all of our payment systems are going crypto. The government is pushing hard for crypto. The U.S. government wants to be number one in crypto, and all the underlying support for that is going crypto currently as we speak. And some of it already is. You got PayPal and Cash App, some of the biggest venue supporters there, especially small business. And then you got Stripe, which is another huge one that backs a lot of them. So there's a lot of big things that are changing. And so to say that this is broke and this is going to head down back to zero is absurd in my mind. Just because it broke this support doesn't mean anything. Now you're going to sell off down here, down to the 37, the 38K mark. But I'm really watching this 32K mark. It's not saying you can't. It very well could break this, But this is again why I say you need to be paying attention, because what's going to happen on the daily, especially on a weekly, if you look on a weekly chart, uh, it's broken. You can see it's kind of broken there as well too. That could be what people are talking about. So they're like, oh my God, it's going to come down. But again, the 32 level is really what matters. I think this 32 level is actually a very solid support. It might be the new base. Again, um, you're still at a higher low, right? Uh, you could even take this back point here. Sorry, let me jump down in here. You can even take this as a lower low here. Some people will go off this, but it really depends on the time frame you're looking at. As long as we don't break that bottom of that wick right here, that's the lower low. So we could even head down to 34 and then bounce and continue running. My biggest thing is I should always be managing risk. Now, if you're invested for the long term, you know, that's something else. You're looking 5 to 10 years down the road, and so you'll be more prepared then. You also have to understand that crypto is normalizing. And something I've been talking about. A lot of people are expecting huge moves, like we were a couple months ago. You have to understand, once the government starts getting in, it's going to get normalized. It's not going to move that dramatically unless there's big events. And something else to also keep in mind is that Bitcoin is moving exactly like the market. Um, Again, crypto is becoming the underlying financial support, right, for a lot of these companies in the payment systems. And so, being said, it will correlate Bitcoin, I think, will correlate very closely with the market in that aspect. And so there'll be, I haven't really looked at the ratio of this, but anytime the market moves up, Bitcoin will rip up. Anytime the market moves down, Bitcoin will rip down. And now, what's the ratio of that? For every 10 points that the index moves up, maybe Bitcoin only moves up 2 points, right? And so it's something to keep in mind. It's not always that way. It flips, it's in and out. There'll be times when they move together, there'll be times when they don't, they inverse. But right now, Bitcoin has been closely tied with the way the market is moving, and that's all been driven off of events and policy changes and everything else. So, again, any new policy or event that happens is really been very heavily weighted, especially because when you're talking about inflation and everything. So going into this week, Tesla. Sorry, I've been kind of long-winded there, but there's a lot of information that's going out right now that needs to be said. So Tesla, big one watching this week. Again, it didn't make something to be very mindful of. It did extremely well on earnings and had this little pop, and then it just died. So this is what I was talking about on Thursday. It really wanted to go, and then it just completely died, and is holding this base. Essentially, that 978 mark. So you want to see if this hold is. Maybe we continue playing out this wedge, and then we get a break and a rip. Kind of plays out into that FOMC meeting. But the longer we hold this in the market, if the market continues to sell off or whatever the case is, again, I think the biggest weight now is Aapl. What's going on with Aapl, and then from that point, FOMC. So we got a lot of events that are coming up that are very, very heavily weighted. That's going to determine which way we go from this point. Again, Tesla can sell off, and I'm sure it will. Probably back down to 900, maybe 850. I think is a strong possibility with Tesla from this point. And you do have to realize too that after big tech, these things start to cycle down and they'll start selling off again. So you just have to be patient. After an earnings, you got a couple days after the fact. If they don't make a move up, they're going to come down because that means it's the market sentiment in general is bad. And so they will just sell off, and then they'll turn and they'll start ripping back up again. So again, after every earnings, you got a couple days, and then from that point, you just let them go, because what typically happens, again, they just sell off until they kind of reset premiums, and then again, about 3 to 4 weeks out before the next earnings, they start pushing back up again. It's typically how these cycles work. It's not saying that they always work that way, but a vast majority of them do work that way. So that's Tesla in general. I'm really watching this one this week. Again, it hasn't had a crazy move. It did have this pre-market. This was the pre-market run, the pre-earnings run, and then just bad market sentiments have been kind of making it rattle here. So just want to see if the market does start ripping this week. Tesla will be one of the first ones to start ripping because of the earnings. So I want to keep an eye on this. Like I said, SPX got so much priced in that it's not even worth playing because you're going to lose money. But if Tesla does start to rip the contracts, this consolidation here helps the premiums on the option contracts. So it will help to the upside for Tesla. So that's what I'm looking at there. Amazon, again, you got big earnings coming in. This one is going to be interesting. This one I think can go either way. Sanctions may or may not it's going to affect Amazon, but how much? Lockdowns are going to affect Amazon, but how much? That is the question on all these companies. And so we have to see, again, it could go either way. It is very close on a lot of these. So you have to be careful and mindful of this. But Amazon can possibly sell back down to 27, 28. Strong possibility if it does break this 28.86. And another big thing with Amazon is they priced in so much these contracts aren't even worth playing. So you have to shift your focus kind of on some other different things. But if that does sell, that's where it's going. Could pop back up to the 31.13 mark for earnings. Again, these are ones you want to watch and see what happens if they do really well and then just start selling off. Again, that's another indicator that the market is in a sell mode for the most part. Google is another one I have. This one's been absolutely wrecked because I think with YouTube and everything, I think what's going to happen with this is that it's going to probably get hit really bad because of that. Now it's absolutely crushed all earnings. I think this earnings might actually be pretty bad if they lose all the Russia subscribers. It very well could take a major chunk out of their ad revenue. If that's the case, then this thing maybe hit pretty heavy. Again, a lot of these big name stocks are doing stock splits for recession to be recession proofed, and as well to help them be less volatile. So we have to see what happens with Google this week. But again, at a key level, this 2375 could possibly rip if it does come back up to the 2493. That would be a good short for the first pop. But again, you have to see how the contracts play. Is this going to burn enough premium to allow to start making profit off options again going into this week? Microsoft is the last one I have. Now, I don't typically play Microsoft, but it'll be interesting on this earnings on how they do. They're at a critical 0.2 at the 274 mark here. It is holding the 20 EMA. We want to see if this does hold and does pop back up. Again, if it retests this 287 mark, it's going to, if it crushes earnings, it can break through this and start head back up. But again, with everything going on with Microsoft, gaming has took a heavy hit as well over the past couple of days. Is that going to heavily influence what happens with Microsoft? Now that Microsoft has so many different products, we have to see about that as well. But so watching this one very closely, watching that key level, watching 287. Again, if it did retest that and get rejected pretty harshly on that one. So I always talk about first bounces. Even though you got this hard push here, it wicked back down and then got sold off. So those are the ones I'm watching now. I know this video was very long. There's a lot of information in this video. I think you can go back and go over the video. I think this video for upcoming week was more so just kind of more of a learning session on what's going on and how to be watching the market. So even though it says daily update, it's good to go back through this video probably multiple times because of that fact that there's just a lot going on in general. So you need to be keeping an eye on that and seeing what's going on. And then it will help you understand the market, help you understand options. Even if you don't trade options, understand that the options, they kind of they tell you what is going on, what the market maker is expecting. If they're expecting a lot of volatility, those numbers will be high, and especially around earnings are going to be high either way. So just be mindful of that. Be very careful this week. There's some big moves. Again, don't get chewed up. I did list all the big beta stocks. Qualcomm also has earnings this week. I think I'm watching that one as well. But because they normally do really good on earnings, and chips have just been getting destroyed, so I want to see how that plays out moving forward. But nonetheless, if you made it this far, congratulations. This is a long video. Give yourself a pat on the back, drop a thumbs up, and until next time, I'll see you guys later.